My dear students, today we will discuss the MTB for CMA Intermediate for June 2025. Please follow me. The first section A, all are A part questions, we will solve one by one. The first question is manufacturing cost are rupees 50,000 and number of units produced 5,000, what is the fixed cost per unit? So, total manufacturing fixed cost are given 50,000 rupees. Total number of units produced, that is 5,000. So, what is the fixed cost per unit? You have to just divide the total manufacturing cost, fixed cost divided by number of units. So, how much? Actually, 50,000 divided by 5,000. 5,000 is the number of units produced, 50,000 is the fixed manufacturing cost. So, if we divide that, how much? Rupees 10. So, rupees 10 is the fixed cost per unit. So, fixed cost per unit is rupees 10. So, answer A is the correct answer. Please listen. So, make note of it. A is the correct answer. A is the correct answer. And then question number 2. Dash is the method of dealing with overheads which involves spreading common cost over cost center on the basis of the benefits received. Actually, the overhead apportionment, it is a process, it is a method of dealing with, and then spreading common cost as per cost centers on the benefits, on the basis of the benefits received. So, overhead apportionment is the correct answer. So, B is the correct answer. Please make note of it. B is the correct answer. And then question number 3. Standard price of material per kg rupees 20. Standard consumption per unit of the production is 5 kg. Standard material cost of producing 100 units. So, we have to find out the standard cost for producing 100 units. So, for manufacturing 1 unit, we have to spend 5 kg of the materials. So, how much of material requirements? So, 200 into 5, that is 500 kg we need. 500 kg. What is the cost? The raw material cost is rupees 20 per kg. So, if you multiply, so 500 into 20, that is 10,000 rupees. So, 10,000 rupees is what they are asking, the standard cost of producing 100 units. So, 10,000 rupees is the correct answer. Option D is the correct answer. Please make note of it. D is the correct answer. And then in a period, 11,280 kilograms of the materials used at a total standard cost of rupees 46,248. The material usage variances is 492 rupees. That is adverse. Adverse means minus balance is given. What was the standard allowed weight of the material? Actually, in this question they are asking for standard quantity. But material usage variances is given. So, material usage variances is given. So, MUV is given. So, MEV equal to standard price into standard quantity minus actual quantity. So, standard price we have to find out. So, standard price means how much? Actually, the kilograms, the total standard cost is 46,248 divided by the number of units, actual materials used, that is 11,280 kg. So, if we divide this, we can easily find out, 46,248 divided by 11,280. So, standard price is ₹4 rupees 10 paise. So, we got it, standard price. What is the standard quantity? Standard quantity we are asked to find out. But actual quantity is 11,280 kg. So MUV is, that is given as a minus, that is minus 492. So if you make a equation, you can easily find out what is the value of standard quantity. So MUV equal to minus 492 equal to standard price is 4 rupees 10 paise. Standard quantity we have to find out. So standard quantity, keep it like that, minus actual quantity. Actual quantity means 11,280. So 4.1 into standard quantity. Suppose 4.1 SQ minus 4.1 into 11,280. So that is how much? 46,248. Here keep it as it is 492. So if minus 46,248, it will become positive. So here 46,248 minus 492 equal to 4.1 SQ. So how much? 46,248 minus 492 equal to 45,756 equal to 4.1 SQ. So SQ equal to 45,756 divided by 4.1. So divided by 4.1, the answer is 11,160 kg. So the standard quantity is 11,160 kg. So the answer B is a correct answer. Please make note of it. Answer B, 11,160 kg. And then next one is, what defines an integral accounting system? Integral accounting system means it is a consolidation of the both cost and financial accounting. That is it. So here integrated accounting 64 answer is given: separation of cost and financial records, streamlining reconciliation statement, sole reliance on financial principles, and then consolidations of the cost and financial information. So consolidation of cost and financial information is the correct answer. Please make note of it. Answer D is the correct answer. Please make note of it. And then a company has set up a laboratory for testing of the products for compliance with standards. With salary for this laboratory staff are part of. So please make note of it. Salary of laboratory staffs for testing the product for compliance is nothing but it is a qualification control, quality control cost. So out of 4, which one is correct? Direct expenses, it is not correct. Quality control is correct. Works controlled under. So the quality control cost is the correct answer. So make note of it. Answer B is the correct answer. And then CAS specifically deals with cost accounting standards. CAS specifically deals with employee cost, packing material cost, direct expenses, repairs and maintenance. So packing material cost is the correct answer because CAS deals with only packing material cost. So answer B is the correct answer. Make note of it. Answer B. In which of the following methods of pricing cost lag behind the current economic values? Replacement method, last in first out method, and then first in first out price method. So FIFO method, actually under FIFO method, the cost lag behind the current economic situations, values. So that is the correct answer. Answer C is the correct answer. Please make note of it. Answer C is the correct answer. And then which of the following is deducted from the total cost to calculate the net profit? Actually total cost. From the total cost, which one is to be deducted in order to find out the net profit? So selling expenses, opening stock, direct materials, indirect labor. All of us we know the selling expenses. So selling expenses is to be deducted from the total cost to calculate the net profit. So answer A is the correct answer. Please make note of it. Answer A. And then What type of cost incurred to support the multiple cost objects but cannot be directly traced to any specific one? Actually, that one is direct cost, indirect cost, or variable cost, fixed cost. In the question itself, please understand, type of cost incurred to support multiple cost objects but cannot be directly traced. Cannot be directly traced means that is indirect cost. So indirect cost is the correct answer. Option B is the correct answer. Please make note of it. B is a correct answer. And then this is important question. We have to calculate. A company operate a job costing system. The job number 6789 which requires rupees 345 of the direct materials, 210 of direct labor, which is paid at rupees 14 per hour. Production overheads are absorbed at the rate of 30 per direct labor hour, and non-production overheads are absorbed at 40% of the prime cost. Require what is the total expected cost of the job. So here direct material is given, direct labor is given, so we can find out frame cost. After that, production overheads means that is how many hours we are producing, using, that we have to calculate. Actually, please, direct material is rupees 345, and then direct labor, that is 210 rupees. Direct labor 200 rupees means how much? Actually 14 rupees per hour. Actually 210 rupees for, per hour cost is 14 rupees per. So 14 rupees, if we divide 210 divided by 14, so the number of hours we worked we can find out. So 210 divided by 14, that is 15 hours we worked. 15 hours at the rate of 14, that is 210. So if we add these two, direct material and direct labor, we can find out that is 555. It is a prime cost. And then production overheads, but in the question hours it is told production overheads are absorbed at the rate of 30 per direct labor hour. How many direct hour? Actually production overheads. So we worked 15 hours, and in the question itself mentioned 30 rupees per direct labor hour. So 30 rupees. So 15 into 30, that is 400 rupees for production overhead. And then non-production overheads. What is non-production overheads? Non-production overheads 40% of the prime cost. The prime cost is 555. Out of that, 40% belongs to non-production. So 555 into 40%, that is 222 rupees. So 222 rupees for non-production. So if we add what they are asked, require what is the total expected cost of the job. So it will be the job of cost. You have to add, and then 345 plus 210, that is prime cost. So prime cost 555 plus production overheads, that is 450 plus non-production overheads rupees 222. So total is 1227 rupees. So it is a total expected job cost. So what is the answer given? 7221, it's wrong. 1227, that is correct. 1227. So the answer B is a correct answer. Answer B is a correct answer. So make note of it. 1227. That is a correct answer. Please make note of it. And then question number. The budget that is prepared, first of all. Actually, in the case of the budget preparation, the first budget we have to prepare, that is sales budget. It is a fundamental, it is a basis. Because if we know only about the sales, accordingly we have to produce budget. And then if we know the production budget, on that basis we will decide how much purchase, like that. So sales budget, assuming that is a key factor, that is a correct answer for question. So Answer B is the correct answer. Please make note of it. Sales budget, assuming that it is a key factor. And then company enjoys three drivers, employs three drivers to deliver the goods to the customer. So, in order to make available of the product to the customer point, so we employed three drivers. For them, we paid salary. So, salary paid to the drivers are part of the prime cost, or direct production cost, or production overhead cost. Actually, it is too far. Selling and distribution overhead, that is a correct answer. Please make note of it. Selling and distribution overheads. And then question number. Next one is question number 14. Which section of the Companies Act 2013 deals with the adoption and adherence of the cost accounting standards? So, all we know that is section 148. 148 deals with the adoption and adherence to the cost accounting standards, CAS. So, B is the correct answer. Make note of it. And then one more question. When a company wants to prepare a factory overheads budget in which the estimated costs are directly derived from the estimates of activity level. If any budget on the basis of the estimates of activity level, so which is that budget is called flexible budget. That is a correct answer. The flexible budget is only based on the estimates of activity level. So, A is the correct answer. Make note of it. A is a correct answer. And then we will see one by one section B. Section B, and then just 1 minute, I will explain the question, then only we can read. The question, PQR Limited and sells its a typical brand of tiffin boxes. So, it is a manufacturer of the tiffin boxes and it is own its brand name. The installed capacity of the plant is 1,20,000 units per year, distributed evenly over a month of calendar years. So, the installed capacity is 1,20,000. That means every year at least they have to manufacture 10,000 units. So, 1,20,000 divided by 12, that is 10,000 units evenly. So, throughout the year they should produce 1,20,000 units. So, the cost accountant of the company has informed the following capital structure, cost structure of the product, which as follows. So, for manufacturing, the raw material cost is 20 per unit, direct labor 12 per unit, direct expenses 2 per unit, variable cost 16 per unit, fixed overheads 3 lakhs rupees. Semi-variable expenses, some part will be fixed and then remaining part will be variable. So, semi-variable overheads 7,500 rupees up to 50% capacity and additional 2,500 per month for additional 225 capacity utilization. The plant operating, this is important, 50% capacity during the first 7 months. So, for example, first 7 months means if it is January, February, March, April, May, June, July, up to July. And then because it is a calendar year. So, August, September, October, November, December, the remaining 5 months they are manufacturing 100%. So, 100% capacity in the remaining months of 7:5. The selling price of the period from 1st January 2025 to 31st July 2025 was fixed at 29 rupees per unit. The firm has been monitoring the profitability and revising the selling price to meet its annual profit target. Actually, the target is throughout the year for 12 months. The net profit target is 8 lakhs. So, it should be 8 lakhs. Please make note of it. Identify the clearing price, selling price per unit for the period from 1st August 2025 to 31st December 2025. So, we have to prepare, you are requested to prepare cost sheet. clearly indicating the total cost per unit and as well as the profit for the period. So, two column you have to prepare. One is for 1st January to 31st July for 7 months, and then 1st August to 31st December. That is, it is for 50%, that is for 100%. Make note of it. This is for 50% capacity utilization. This is 100% capacity utilization. So, we have to prepare the cost sheet. Please, let's prepare the cost sheets. So, here cost sheets. So, 50% capacity, two column we will open, that is 100% capacity. 100% capacity, 50% capacity. 100% capacity, it's for actually total installed capacity, that is 1,20,000 units for 12 months. For how many months? Actually, the first, for 50% capacity is utilized for 7 months up to July. So, how much? So, 1,20,000 divided by 12 into 7, that is 70,000 units produced during 7 months from 1st January to 31st July. So, 70,000 units. Please make note of it. That is 1st Jan to February, March, April, May, June, July. 31st July. 2. So, please make note of it. Here 100% capacity. 100% capacity means 12,000. 1,20,000 divided by 12 into 5. So, 1,12,000. Sorry, 20,000 divided by 12 into 5. That is 50,000. So, 50,000 units they are manufacturing during the period, that is 1st August to 31st December. So, we have to prepare for this. So, this is a capacity utilization. So, capacity utilization is differing. First 7 months 50% capacity, remaining 5 months 100% capacity. So, capacity. So, we will see cost sheets how to prepare the raw materials. First, raw materials. Raw materials how much? Actually 35,000 units. You see how much percentage? That is 50% capacity. So, 70,000 into 50% capacity means that is 35,000 units we are manufacturing. So, total installed capacity 1,20,000. For 7 months installed capacity, that is 70. So, out of that we are using only 50% capacity, that is 35,000 units. So, raw material rate is 35,000. How much raw material rate? 20 rupees. Or per unit cost is 20 rupees. So, 35,000 into 20, that is 7 lakhs. And then raw materials, direct labor, how much? Let's finish first 50% capacity. Direct labor how much? 12 rupees. So, the same 35,000 into 12. And then direct expenses. Direct expenses, that's also 35,000 into 2 rupees. So, 35,000 into 12. 35,000 into 12, that is 4,20,000 for direct labor. Direct expenses 2, 35,000 into 2, that is 70,000 rupees. 70,000 rupees. And then variable overheads. Variable overheads. Variable overheads are how much? 16. So, 35,000 into 16. 35,000 into 16. That is 35,000 into 16. That is 5,60,000 rupees. 5,60,000 rupees. And then fixed overheads. Fixed overheads. That is how much? Total 3 lakhs. 3 lakhs for how much? For 12 months. It's for 7 months we have to find out. So, 3 lakhs for, if 3 lakhs for 12 months, what is the value of for 7 months? So, 3 lakhs divided by 7, 3 lakhs divided by 7 into 5, that is 1,75,000. 1,75,000. So, fixed cost. And then fixed overheads, semi-variable overheads, semi-variable overheads. That is how much they are telling, that is, if it is 50% capacity, 7,500 rupees per month. So, per month 7,500 into 7 months. So, 7,500 into 7, that is 52,500. So, this is the total cost. So, total cost how much? So, 7 lakhs plus 4,20,000 plus 70,000 plus 5,60,000 plus 1,75,000 plus 52,500. So, answer 19,77,500. So, total cost rupees 19,77,500. 19,77,500. Likewise, we have to calculate for 50,000 capacity, that is 100% percentage utilization. So, 50,000, how much we have to find out? Because this is 100% capacity. So, this we have to calculate raw material cost is, 20 rupees. So, 50,000 into 20 rupees, that is 10 lakhs. And then 50,000 into 12 for direct labor, that is 50,000 into 12. So, that is 6 lakhs. And then direct expenses is 2 rupees per unit. So, 50,000 into 2, that is 1 lakh. And then variable overheads 16 rupees. So, 50,000 into 16, 16 5s are 80. So, 8 lakhs. And then say variable, semi-variable, fixed cost, variable, and then fixed overheads. Fixed overheads means 3 lakhs for the year. So, for 12 months 3 lakhs, for 5 months how much? So, 3 lakhs divided by 12 into 5, that is 1,25,000. And then next, semi-variable, please make note of it. Semi-variable means for what they are selling, additional 2,500 per month for every additional 25%. Now we are using 100% capacity. That means formerly 50%, now 75% and then 100%, 25%. So, for 125% 2,500, so it must be added 5,000 rupees, 2,005 plus 2,005, so 5,000. Previously how much it was? 7,500. So, 7,500, 2,500 plus 2,500, how much? This amount 12,500. So, 12,500 for 5 months. So, 12,500 for 5 months, that is 62,500. 12,500, it is 500. So, 12,500 into 5, that is 62,500 rupees for semi-variable. So, if you add, make note of it. So, 10 lakhs, 6,000, 6 lakhs, 1 lakh, 8 lakhs, 1,25,000, 62,000. If we add the total amount, how much? 10 lakhs plus 60 lakhs. 6 lakhs, 1 lakhs, 8 lakhs, 1,25,000 plus 62,500. So, the amount will be 26 lakhs 87,500. 26 lakhs 87,500. So, make note of it. And then sales. What is the sales value? Sales value, keep it total cost number 1, sales value 2. Sales value means 35,000 units actually we manufactured during the 7 months, that is 50% capacity. At the rate, what is the selling rate? 69 rupees. So, selling cost, sales value 35,000 into 69, that is 24 lakhs 15,000 rupees. So, 24 lakhs 15,000 rupees. 24 lakhs 15,000 rupees. And then here, next one is profit. How much profit? So profit we will find out for first phase. So sales, how much? This amount. I mean cost, this amount. So sales minus cost is the profit. How much? 24 lakhs 15,000 minus 19 lakhs 77,500. So 4 lakh 37,500. This is a profit. Understand? The selling price that is 69 rupees. So this is a profit. Actually in the question itself what they told, the annual profit target, that is 8 lakhs. So for the total year the profit should be 8 lakhs, but up to 7 months we earn profit 4 lakh 37,500. So remaining 5 months how it should be, how much it should be? So 8 lakhs minus 4 lakh 37,500 should be the profit for 5 months. So 8 lakhs minus 4 lakh 37,500, that is 6 lakhs, I mean 3 lakh 62,500. 3 lakh 62,500. Understand? So this is correct. So here now we have to calculate, that is a profit cost per unit. For cost per unit means total cost, here in this case total cost 19 lakhs 77,500, total number of units 35,000. So cost per unit 19 lakhs 77,500 divided by 35,000. So that is 56 rupees 50 paise. So cost per unit 56 rupees 50 paise. It's over. But here we have to calculate the total cost is 26 lakhs 87,500. Profit is, so what should be the selling price? Cost plus profit, that is a selling price. So selling price cost is 26 lakhs 87,500 plus 3 lakhs 62,000, 26 lakhs 87,500 plus 3 lakhs 62,500, that is 30 lakhs 50,000 is the sales rate, 30 lakhs 50,000. We find out. So sales value we know, selling price we have to find out. Selling price means how much? Here 69 rupees. Here we have to calculate total selling cost is 30 lakhs 50,000 divided by 50,000. So selling price will be 61 rupees. So selling price rupees 61 rupees. How we find out? 30 lakhs 50,000 divided by 50,000 units. So selling price. How much cost per unit? Total cost here 26 lakhs 87,500 divided by 5,000. So cost rate 26 lakhs 87,500 divided by 50,000, 53 paise 75 paise. That is 53 rupees 75 paise. This is a cost per unit. Sales rate is, that is 61 rupees. Here I mean, please listen, in the case of 50% capacity, the cost per unit, that is 56.50, selling per unit 69 rupees. In the case of 100% capacity during the 5 months ended 31st December, so the cost price is 53 rupees 75 paise and then selling rate 61 rupees. So this is over, and then question we will see, question number 2B we will find out. To B, Xeon Limited uses 3 types of products, I mean materials, A, B, C. So of the product of P. That means if we want to manufacture product P, we need 3 types of materials, A material, B material, C materials we require. So what is the quantity we require? It is given data actually for A, B, C, what is the reorder level, price per unit, and then usages per unit. So all the things given. Please listen. Raw material A, usages per unit means, for example, 10 kg of raw material A is required for manufacturing the product of P. For B, B material 4 kg is required, C 6 kg required to manufacture the product P. So how much kg of requirements quantity is required to manufacture product P? Reorder quantity is nothing but economic order quantity. Reorder quantity means this much quantity we have to place order every times. So A 10,000 units, 10,000 kg, 5,000 kg, 10,000 kg, A, B, C respectively. Price per kg. What is the price of material A? That is 10 paise, 30 paise, 15 paise for ABC. Delivery period means minimum and maximum. Minimum period, if you order, the delivery will be given within 1 week time. The maximum period it will take 3 weeks. So average means 1 plus 3 divided by 2, that is average 2. 1 plus 3, that is 4. 4 divided by 2, that is 2. Here minimum 3, maximum 5. So 5 plus 3 divided by 2, that is average 4. Here also 2 minimum, maximum 4. So 2 plus 4 divided by 2, that is 3. Reorder level, that is 8,000, 4,750. Minimum level, actually in this case one is missing. Actually what they are missing, the raw materials is reorder level is missing. We have to find out this one. And then minimum level for A also it's not given. We have to find out. Apart from that, some requirements are given. We are requested to prepare some other things. So B, minimum level for B, C given. Now the weekly production varies from 172. That means minimum level, maximum level. So minimum level, that is 170 units. Maximum level, that is 225 units. That means how much average should be? So minimum plus maximum divided by 2. So 175 plus 225 plus 400. So the 400 divided by 2. So average level is 200 units. This also required. So minimum stock of A, maximum stock of B, and then reorder level, average stock of level, all the things we have to prepare. We will prepare one by one. Please listen. So here, so minimum stock level of A. First we will find out, because minimum stock level it is required in the box. It is actually a question mark. We have to find out. So the minimum stock level. Minimum stock level. Minimum stock level, actually reorder level minus average consumption. That is a formula. So minimum stock level, how to find out? Minimum stock level equal to reorder level. Reorder level is given level minus average rate of consumption, average consumption into average delivery period, average time required. So how much actually? Reorder level it is given. How much? 8,000 units. So 8,000 units reorder level. How much average rate of consumption? Average rate of consumption, the question just we calculate 200 units. So 200 units for producing the product. A material requires how much it is required? Actually 10 kg. This one is 10 kg. So 200 into 10. And then what is the period? Actually minimum period, average period, that is 2. So into 2. So average consumption equal to 200 units into 10 into 2 weeks time. So how much? 200 into 10 into 2, that is 4,000. So 8,000 minus 4,000. 8,000 minus 4,000. So minimum stock level should be 4,000 kg. That is a correct answer. So 4,000 kg. Please make note of it. And the next one is maximum stock level. Maximum stock level we find out. And then number 2, maximum stock level. For maximum stock level, the formula is reorder level plus reorder quantity minus minimum consumption. So the maximum level equal to reorder level plus reorder quantity minus minimum consumption. Minimum consumption means minimum rate of consumption how much kg, how much minimum requirements, and then into minimum reorder period, I mean minimum time required, minimum reorder period, both are same. So here reorder level it's given how much, 4750 and then 5000, this one is, so 4750 reorder level plus reorder quantity 5000 kg minus minimum consumption, that means minimum consumption how much, minimum, actually minimum period 3, minimum consumption is 175, so 175, and then how much this material required for producing 1 unit, that is 4 kg. So this is a minimum consumption, so 3 into 175 into 4, that is 2100. So here 4750 plus 5000, that is 9750 minus 2100, so answer is 9750 minus 2100, that is 7600 kg, 7650 kgs, that is a correct answer. Please make note of it, maximum stock. And then reorder level of C, whatever the figures we can easily find out. First let us prepare that one. So reorder level of C, reorder level of C means, reorder level there are two formula. First formula here it is applicable maximum usage into maximum delivery period. So reorder level one formula is maximum usage, how much usage into maximum reorder period or time required for delivery, maximum reorder period. So see how much reorder period, actually 4 weeks reorder period. How much maximum requirements, 225. So 225 maximum usage into how much kg, that is 6 kg. 6 kg of C is required to manufacture of P. So 225 into 6 kg into maximum reorder period 4. So that is the answer, 225 into 6 kg into 4. So 5400 kg, that is a correct answer. So that is a reorder level of C. And then here we can find out another method. For example, in order to find out reorder level, minimum stock level, you can use this also. So minimum stock level, minimum level plus average consumption. Average consumption means average rate of consumption into average period, I mean reorder period. So minimum level is, we know 2000 plus average means 200 units into 6 kg used, actually C ki 6 kg into average period is 3, C ki 2 plus this period 3 into 3. So 2000 plus 200 into 6200 into 3, that is 3600. So if this is another method of preparing the reorder level, so 2600 plus 2000, that is 5600 kg. So reorder level, here also 5400, here also 5400. Out of these two you can prepare any one method, is okay. And then we find out average stock level of A. So average stock level, average stock level how much, actually there are two methods, minimum level plus maximum level divided by 2, one method, or another method, minimum stock level plus 1 by 2 reorder quantity. First prepare the second method. So minimum stock level equal to minimum stock level, average stock level, we are just a minute. So average stock level equal to minimum stock level plus 1 by 2 reorder level. Minimum stock level, we know the first thing, A, how much we prepared minimum stock level, that is 2000. Sorry, that is 4,000. So this is a minimum stock level of A. Minimum stock level of A. So 4,000. Reorder quantity. Actually, reorder quantity is 10,000. So 1 by 2 into 10,000. So 4,000 plus 1 by 2 into 10,000, that is 5,000. So the answer is 9,000 kg is the correct answer. kg. So another method also is there, that is minimum stock level. Another method is minimum plus maximum divided by 2. We know minimum, maximum level we should know. For that one formula we have to apply, but it's not necessary, but you should know as a student, you should know the maximum stock level equal to reorder level plus reorder quantity minus minimum consumption. Minimum consumption means minimum consumption of units into minimum reorder period. So reorder level we know 8,000, and then reorder quantity, that is 10,000, minus the minimum consumption, that is 175, into how much of quantity required, that is 10 kg, into minimum period is 1 week. So how much? 8,000. So that is 18,000 minus 1,750. So 18,000 minus 750, that is 16,250. So we know the minimum level. Minimum level we already know. So that is 4,000. So answer is 4,000 minimum level. Now we find out the maximum level, 16,250. So minimum plus maximum divided by 2. So what is the answer? So 4,000 plus 16,250 divided by 2, that is 10,125. That is average stock level. So average stock level, here if we apply this formula, the answer will be 10,125 kgs. So we finished this sum, and then we will go for the next question. Question number 3. Question number 3. Question number 3. Dachshund manufactures a single products. It recovers the factory overheads at a predetermined rate of rupees, 20 per man day. So 20 man days. How many man days? 20 per man day. During the year, the total factory overheads incurred and the man days actually worked were rupees 35,50,000. So 1,50,000 days respectively. That means the man day actually work is 1,50,000 days. And then how much the value? That is 35,50,000 in respect of factory overheads. Out of the amount 35,50 lakhs, 2 lakhs were in respect of the wage for strike period. 1 lakh was in respect of expenses for the previous year booked in the current year. So during the period, 50,000 units were sold. At the end of the period, 12,000 completed units were held in stock. So total sales, cost of sales, total sales 50,000 units. Out of that, 15,000 completed units, that is work in progress. But there is no opening of finished goods. Actually, so in order to find out the total production, sales plus closing stock minus opening stock, it is one formula to find out the production, total production. So there was no stock of uncompleted units at the beginning of the period and at the end of the period. But there were 20,000, please listen, there were 20,000 uncompleted units which may be treated as 65% complete. That means, that is a uncompleted means work in progress. So 20,000 units are there. Out of that, the complete percentage is 65%. So then how much it will be the finished goods? So equivalent production means 20,000 thousand into 65%, that is, it is as equal as to 30,000 finished products. So 13,000. So what is the total? The total 50,000 units we sold, and then here 13,000 equivalent production, and then 1,000 completed units held in stock. I mean at the end of the period, that is a closing stock. So all the three. On investigation, it was found 40% of the unabsorbed overheads were due to factory inefficiency, and the rest were attributable to increase the cost of the indirect materials and indirect labor. Calculate the amount of unabsorbed overheads during the year. So unabsorbed overheads. Analyze the accounting treatment of unabsorbed overheads in cost accounting. So we have to find out, first let's prepare under absorption during 24-25. Under absorption. So under absorption means computation of under absorption, computation of under absorption for 2024-25 you have to find out. So total production overheads incurred, how much total? Simply I hand write total production overheads actually incurred. From that point we have to start. How much? 35,50,000 rupees actually incurred. But it contains the wage paid during the strike period, we have to deduct, and then previous wages booked in this current year, that is also be deducted. So it must be deducted. What are the things to be deducted? So wages paid strike period. So strike period wages wages 2 lakhs we have to deduct, and then previous year wages booked in the current year, that is 1 lakh, that is also to be deducted. So 3 lakhs to be deducted. If we deduct, the total balance will be 32,50,000. So the production overheads, how much in the question it is given, that is 20, you see, 20 rupees per man day. So observe that it manufactures a single product, it recovers overheads recovery at the rate of 20 per man day. How many days? Man days we are working. Overheads means that is 1,50,000. So less production overheads absorbed at rupees 20 per man day. How many man days? 1,50,000. In the question itself it is given 1,50,000 at the rate of rupees 20. So 1,50,000 into 20, that is 30 lakhs. So how much? 2,50,000 rupees. It is under absorption. This is a under absorption. Please make note of it, 2,50,000 rupees. Now we will find out how many units we manufactured during the period, total production, how much of production we produced. So out of that we have to find out whether how much overheads absorbed or recovered, like that we will find out. So the total units sold, how many units sold? Total sold, that is 50,000 units we sold according to the question. And then there is a closing stock still, that is 12,000 units. So we would have manufactured this closing stock also. And then there is opening balance, actually opening balance nil. So nil. And then finished units, finished stock, how much? Actually 50,000 total units, closing stock 12,000, so total 62,000 units. And then one more, work in progress. Out of 20,000 units, the 65% is complete. That means equivalent production 20,000 into 65, that is 13,000 units, that is also a finished products. So total units we manufactured, the total, how much total? 75,000 units we manufacture, for which we have to apportion. So, and then once again, please see, once again, supplementary overhead we have to find out. Before that, out of unabsorbed overhead means that is unabsorbed overhead of rupees 2,50,000 rupees. Out of that, in the question itself, 40%, out of that, in the question itself, 40% were due to factory inefficiency. So, 40% inefficiency due to. So, 40% due to factory inefficiency. How much? 2,50,000 total overheads unabsorbed into 40%, that is 1 lakh. So, it represents 1 lakh rupees. And then the remaining, suppose if we deduct 1 lakh, so 1,50,000 rupees. So, it should be distributed. So, 1,50,000 rupees should be distributed among finished goods, work in progress, cost of sales. So, it should be. So, it should be distributed among finished goods. How much finished goods? 50,000, work in progress, and then cost, closing stock 12,000, and cost of sales 50,000. So, at how much rate? Supplementary rate, please make note of it. Supplementary rate we have to find out. So, at the rate of supplementary rate, we have to distribute this 1,50,000 among finished goods, work, closing stock, and work in progress, completed work in progress. So how much we have to calculate? We find out. So, what is a supplementary rate? How to find out supplementary rate? Supplementary rate is, that is supplementary rate 1,50,000 divided by how much of units actually? 75,000 units total production. So, 1,50,000 rupees for 75,000 units. So, it is rupees 2 per unit. So, we have to distribute apportionment. How to? So, apportionment we have to apportion it. Apportion, calculation of apportionment, like that you can write. So, work in progress how much? Finished goods how much? Cost of sales, that is how much? 50,000 units. So, work in progress means 13,000. That is out of 20,000, 65% is complete. Equivalent production, that is into 2 rupees, that is 26,000. And then finished goods how much? That is 50,000 into 2, that is 1 lakh. So, likewise we have to apportion it. And then cost of sales, that is cost of sales is 50,000 into 2, 1 lakh. And then finished goods, closing stock, that is 12,000 out of work in progress. So, finished goods, that is closing stock. Closing stock how much? 12,000 into 2. Finished goods how much? 24,000. So, if we add like this way, we have to apportion it. So, the total 1,50,000 rupees are apportionate among work in progress, that is equivalent production, that is 26 lakhs, finished goods 12,000 for 24,000, and then cost of sales 50,000 finished product, that is 1 lakh. Likewise, we have to distribute. So, this is over, and then we will see next. So, here the following is available from the financial reports, financial books of Sony Limited, a newly established company for the year ended 31st March 2025. So, in this question, actually, the direct material consumption 50 lakhs, direct wages 30 lakhs, factory overheads 16,000. So, 1 by C, we will easily, by just seeing, we can easily know that we can prepare trading account and profit and loss account. So bad debts, preliminary expenses, legal charges, dividends, everything it will be. Direct consumption is direct trading account, direct wages trading account. Actually in this question, we have to prepare profit and loss account as per financial reports and as per cost records. So we have to prepare according to the cost accounting standards. Cost and profit statement you have to prepare, and then trading profit and loss account we have to prepare, and then we have to reconcile. Is there any difference? Actually there will be difference. So what is the difference? How to reconcile it? We have to do. So 3 stages we have to prepare. First, let's prepare interest received on deposits, and then sales 1,20,000 units. The closing stock is also given, finished goods. Closing stock, there are 3 types of closing stock: finished goods, work in progress, and then profit for the year 2024-25. These are the things given in the question. The cost accounts for the same period reveal the direct material consumption. Actually cost accountant states the direct material consumption is only 56 lakhs, whereas according to the financial reports the direct material consumption is 50 lakhs. So likewise there may be some differences. So let's prepare first as per accounting standard, as per trading records. We will prepare, financial records, we will prepare trading account and profit and loss account. So first we will prepare trading account, and then we will prepare statement of cost and profit, and then we will reconcile. This is a question. So we have to prepare as per financial reports. So trading and profit and loss account. Trading and P&L for the year ended, so and so, like that you can write it. So first one things, the question is raw material consumption. To direct material how much? 50 lakhs. So direct material 50 lakhs. So direct wages how much? 30 lakhs. And then factory overheads how much? 16 lakhs. And then sales how much it is given? 1 crore 20 lakhs. So 1 crore 20 lakhs. And then by closing stock, there are 2 closing stocks: finished goods and then work in progress. Finished goods how much? That is 3,20,000 and then 2,40,000. So 3,20,000, 2,40,000. So if we balance, so 1 crore 20 lakhs plus 3,20,000 plus 2,40,000, that is 1 crore 25 lakh 60,000. 1 crore 25 lakh 60,000. If we balance, minus 50 lakhs, minus 30 lakhs, minus 16 lakhs. So 29 lakh 60,000 gross profit. 29 lakh 60,000 to gross profit. So and then we will find out by GP how much? 29 lakh 60,000. And then selling and distribution, we have to post selling and distribution. So selling and distribution expenses how much? 9 lakh 60,000. And then bad debts how much? 80,000. And then preliminary expenses written off, that is 40,000. And then legal charges, everything is there. Legal charges, that is 10,000. And then administrative overheads, in the initial itself administrative overheads is 7 lakhs, that is 7 lakhs. So if we balance, we will find out. And then one more thing, then income is there. Interest on deposits, that is interest received by interest on deposit, how much? 20,000. And then dividend received, how much? 1 lakh. So if we balance, we will find out the net profit. So 29,60,000 plus 20,000 plus 1 lakh, that is 30,80,000, 30,80,000 minus 9,60,000 minus 80,000 minus 40,000 minus 10,000 minus 7 lakhs. So 12,90,000 according to the financial accounting, the net profit will be, so net profit will be 12,90,000. Now let us see the same profit we are receiving if we prepare the cost and profit account according to the cost accounting standard. Let's see. So according to the financial reports, net profit is 12,90,000. Now let's prepare the statement of cost and profit, I mean cost accounting details. So statement of cost and profit we have to find out. So here we know the method. Prime cost we have to calculate, and then factory overhead, and then cost of production, like that we have to find out. So direct material, how much? Direct material, here in the question direct material is given 56 lakhs. We have already seen direct material is 56 lakhs. Direct wages, how much? The same amount, that is 30 lakhs. The same 30 lakhs, there is no changes, 30 lakhs. And then this is, if we add these two, that is a prime cost, 86 lakhs. And then factory overheads, that is in the question itself it is told, that is it is on the prime cost 20%. So 20% on prime cost how much? The 86 lakhs. So 86 lakhs into 20%, that is 17,20,000. So 17,20,000 is factory overheads. And then if we add, that is 1,03,20,000. And then add opening work in progress, nil, less, I mean closing work in progress, how much? We have to deduct 2,40,000. So if we deduct, that is works cost, this is called works cost. So 1,03,20,000 minus 2,40,000, that is 1,80,000. So that is work cost. And then administrative overheads means we have to find out how many units. Actually in the question itself you can easily find out 12,000, I mean please see, that is 4,000 units closing stock, and then sales 1,20,000. So sales, how much? 1,20,000 units. Closing stock, that is 4,000 units. So total 1,24,000 units production. So administrative overheads is rupees 6 per unit of manufacturing. So administrative overheads, that is for 1,24,000, in the question itself it is told that is 6 rupees per unit. So how much? 1,24,000 into 6, that is 7,44,000. If we add, that is cost of production for 1,24,000 units. So cost of production for 1,24 units. So if we add 1 lakh plus 7,44,000, that is 1,08,000, I mean 1 crore 8 lakhs into 24,000. Understand? It is a cost of production. And then we have to add, if there is opening stock of finished goods, add, there is no opening stock of finished goods, so nil, less closing stock of finished goods, finished stock, that is 3,49,000. How to find out? Actually here total cost how much? 1,08,24,000. For how many units? Cost of production 1,24,000 units manufacturing, the total cost. So how much closing units according to question paper? 4,000 units. So likewise we have to find out the cost of closing finished goods. So if we find out, so 1,08,24,000 divided by 1,24,000 into 4,000, that is how much? 3,49,161 is there, but you can make note of round it off 60. So you can round it off 3,49,160. So now if we deduct this closing stock, the value will be, that is a cost of goods sold. That is for how much? After deducting 4,000, that is it's for 1,20,000 units. How much it cost? 1,08,24,000 minus that 3,49,160, that is 1,04,74,840. So selling and distribution expenses. What is the sales value actually? What is the production? That is the whole products we sold it. So at the rate of 8 rupees. So selling and distribution expenses we have to add. So 1,20,000 units at the rate of 8 rupee, that is 9,60,000 rupees. So if you add this is the cost of sales. So cost of sales how much? So 1,04,74,840 plus 9,60,000, that is 1,14,34,840. So net profit we have to find out, that is a missing figure. Actually the sales, how much sales? Actually sales is 1,20 lakhs. The cost of sales 1,14,34,000. So remaining should be the profit, that is a balancing figure. So minus 1, how much? 5,65,160. So 5,65,160. This is a profit, that is a net profit as per costing records. So as per costing record, net profit is 5,65,160. As per financial reports, that is 12,90,000. That is a difference. We have to reconcile the statement. How to reconcile? So we will reconcile. How to reconcile? What are the figures actually which is included? So reconciliation of profit as obtained under cost and financial report, as obtained under both cost and financial records or accounts. So we have to reconcile. We will take it as a base from cost records, profit as per cost record. How much we prepared? That is 5,65,160. If we start with this figure and then some adjustments are there, something to be added, something to be deducted, and then final figure must be tallied according to the profit arrived by financial statements. So 5,65,140, that is cost records, as per cost records, the profit. What are the things added? So excess of material consumption. For example, material consumption means in costing record 5,60,000, but there in financial record costing records actually 5 lakh 60. Direct material, sorry, 56 lakhs, but here 50 lakhs. So 6 lakhs are excess, I mean mentioned extra in cost accounting. So we have to add this one. So we have to add excess of material consumption. How much? 56 lakhs minus 50 lakhs, that is 50 lakhs. One more zero. 50 lakhs, that is 6 lakhs rupees we have to add. And then factory overheads also excess. Factory overheads, please check it up. So 17 lakhs 20,000 minus 16 lakhs. So that is 1,20,000 rupees extra. And then administrative overheads also excess. Administrative overheads 7,44,000. How much administrative expenses? I mean, in this question itself we will see administrative overheads. Administrative is 7 lakhs, but here 7,44,000. So 7,44,000 minus 7 lakhs, that is 44,000. So dividend received, actually dividend received, it will appear in financial accounts only, but it will not consider in cost accounting. So it should be added. How much? 1 lakh. And then interest received, I mean that is 20,000, it is to be added. So we have to add all the things. So 6 lakhs and then 1,20,000, 44,000, 1 lakh and then 20,000. So 6 lakhs plus 1,20,000 plus 44,000 plus 1 lakh plus 20,000. So 8,84,000 we have to add. If we add, that is 14 lakhs 49,160. 14 lakhs 49,160. And then some other items, actually we have charged bad debts, preliminary expenses, written off, everything must be done in the financial accounts, not in the cost accounting. So these are the things to be deducted. So bad debts, how much? Bad debts, that is 80,000 to be deducted. And then preliminary expenses, that is to be also deducted, that is 40,000. And then legal charges also administrative expenses, that is 10,000, that is to be deducted. Overvaluation of closing stock, actually in the financial account 3,20,000, but in cost accounting 3,49,160. So 3,49,160 minus 3,20,000, how much? That is 29,160 we have to deduct. So total how much deducted? 80,000 plus 40,000 plus 10,000 plus 29,160, that is 1,59,160. So if we deduct, it should be the profit as per financial statements. If it is so, we will find out 14,49,160 minus 1,59,160, that is 12,90,000 rupees. So 12,90,000 rupees, it is a profit as per financial reports, financial records, financial statement. So is it so? Yes, it is correct. Actually 12 lakhs, how much it was there? 12,90,000 rupees, correct. Now it is reconciled. So next part of the cost accountancy will be released tomorrow.